I'm just going live, so just a minute. Can you watch your video, like when you watch yourself on video? Can you watch your video back? Are you okay with it?
I don't know how to do it, but yeah, happy to. I mean, later on, yeah, there are always points about what could have been
You
done
can
better,
improve.
etc.
Yeah. I still find it very weird. So yeah,
It is at times, yeah.
it is. It is. But now I'm kind of warmed up to it. Earlier it was a little, but now it's cool. People are like very accepting. Cool. So everyone, thank you so much for joining in. I am Chantal, founder of The Finance Story, and welcome to our LinkedIn Live Career Insight series. Today we have a very interesting topic and a very interesting person. The topic is private equity and is understanding the private equity and VC landscape, through the lens of the ex-finance controller at Kedaara, and also who was the CFO at Lumikai, which is a VC fund focused on the gaming sector. So as per Bain's report, India is emerging as a key player in Asia Pacific's PE/VC landscape, contributing over 20% of investments in 2023, which is quite a notable increase from 2018-17, where it was around 13-14%. So to understand more on this, we have with us Dev, of course, who has been with Kedaara. To add context, Kedaara Capital has closed its at 1.7 fourth fund of 1.770 billion, which is the largest fund raised by an Indian private equity fund in the last 12 years. So Dev is going to talk about his journey of almost 10 years at Kedaara, the evolution of the PE industry, opportunities he sees in this horizon, and of course what opportunities we can tap into as finance professionals, be it CFO services, virtual CFO services, or working in a fund. Dev has also started his own fund advisory service, which is known as Serendipity Fund, and more on this during our conversation. So Dev, thanks a ton for joining in, and really appreciate your time. Thank you so much.
Thank you so much, Chantal, for having me here, and hi everyone. Great to connect.
Thank you. And everyone, thank you so much for joining in. If you have questions, do type in and we'll take it right away. So, Dev, my first question to you is, you are a chartered accountant. You had your own CA firm, right?
Yes.
And I think 12 years ago, you moved to Kedaara when it was also more of a startup and just starting up in India. So, what has
True.
been your journey like? And tell us a little bit about what does a private equity do and what was it starting in a PE firm like a decade ago?
Sure. So I'd like to say that the journey from a CA firm to a PE firm was something which was well planned and completely thought through, etc. But if I said that, I would be lying. Essentially, I was practicing for about 3+ years, and two of the co-founders of Kedaara had to be individuals whom I was giving some consultation on their personal taxes. So when they're founding Kedaara, along with the third co-founder, we had a conversation. They conveyed a lot about how Kedaara is sort of planning to sort of be in a way game changer for Indian PE. Not their words, my words. I'm paraphrasing here. And yeah, I think I was completely convinced and joined Kedaara. So it was a completely unplanned journey, to be honest, but something which I'm very happy about and was very lucky to join Kedaara when I did. To talk about how it was and what does a PE fund do,
Yeah.
I'll probably sort of just mention that when I joined Kedaara, I didn't know anything about PE, to be honest, apart from a few generic readings, etc. Uh, Most of it was learned on the job as one goes along. So, in very basic terms, a PE is essentially raising capital from investors,
Yeah.
finding opportunities to deploy that capital into companies, and monitoring those companies so that you help them grow. And after a point of time, you sell your stake, hopefully at a significant profit, and everyone's happy. That's really the long and short of what a PE fund or a VC fund or angel fund does. Now, obviously, there are changes and difference of degrees in all of these. Angel fund typically would give the very early check to let's say IIT graduate who is just passed out and just has an idea without anything else. A VC fund would probably back a slightly higher amount, and those who have some sort of a product readiness, even if it's not fully ready, at least it's not just a thought. There's some work which has gone through it.
Yeah.
Startups essentially, and a PE fund, private equity fund, will fund larger companies who have been in the business for a few years, who are generating revenue, ideally generating some profits as well, and who are looking for raising capital for the growth. So that's essentially the overall angel VCP landscape. Uh, and yeah, the journey has been fantastic, learning a lot of it as one goes along. And yeah, happy to answer any specific questions that you might have.
Cool. So I wanted to understand when you talk about Kedaara, right? Such an interesting journey, and you were a part of it from almost day one, correct?
True, true.
Right? So when you talk about their game-changing plan, what was the plan like, and how do you think India has shaped in that direction, and so is the PE market?
Sure.
Because like the word private equity is so common today, right? We use it so often. There are CFOs providing services, and everyone's looking at the PE market in the US and in India as well. And then we have KKR, which set up an office in Gurgaon, their back office, and we've got Apex Fund serving the PE equity
True.
market. So there's so much happening.
Mhm.
So just share some highlights.
Sure. So, and PE has become definitely more well known over the past decade or so. But even before I joined Kedaara, PE had definitely established some significant presence in India, that's for sure. Most of the early entrants, I would say, were global PE funds who were looking at India market and who had set up shop in India. Not as a back office or anything, but to deploy for capital in India. Initially, the capital raised was primarily global capital, but over a period of time, even the investors base also included domestic Indian investors as well. I think the thing that Kedar did differently, a there was a significant focus on ensuring value addition to the portfolio company. It's not only a case of deploying capital, but beyond that, how do you help portfolio companies in terms of strategic guidance were required, in terms of ecosystem connections were required, and I think that definitely helped in the journey. And for me personally, that was something very interesting to see. It's not just deploying capital, but essentially helping the company grow and sort of being with them through thick and thin. I think that definitely was a amazing journey to be a part of, a small part of.
Okay, okay, cool. Yeah. So, when you talk about PE, right, you want to take us a little bit through what has happened and, some insights of how is it going to shape
Sure,
in future and
sure.
the current landscape as well. Yeah.
No, happy to.
And
I
also the
think
evolution of it, right? Like in the last 10 years, like if you could break it into chunks and just take us through it.
absolutely. So, if you look at again, let's not talk about angel and VC for
Yeah.
this specific point. Uh,
Yeah.
if you talk about PE funds, typically company funds who invest significant sums of money in established companies. There are so many types of them. There could be, as I mentioned, global funds who are looking to diversify their portfolio in India, homegrown Indian PE funds like Kedaara, for example, or multiples, uh, who are very well aware of how the Indian business ecosystem overall functions, and therefore are in a really good position to help both the founders as well as the investors. There are specific sector-specific PE funds also. Real estate is a prime example. But apart from that, there are funds which specifically invest in, let's say, tech or only in pharma, etc. There are funds which are sector agnostic, who will invest in pretty much every sector, except maybe one or two specific sectors which they don't really have a lot of expertise in. There are impact investing funds who invest for a dual cause. One is obviously financial gain for their investors, but also to make a change to the socioeconomic, a positive change to socioeconomic situation in the markets. So there are several of these types. Plus, you have, and all of these are equity, but there could be venture debt funds as well. So there are so many sort of options available in terms of the breadth as well as the depth. The Indian P market has been growing significantly. Just to give an example, in terms of sort of cold hard numbers, in 2024, there are about 1,400 AIFs which are registered in India. Uh, Now, this number was about 650 or thereabouts about 4 years ago. So, in just 4 years, the number has doubled. But what is even more interesting is that the commitment raised from investors is about 11.8 lakh crore rupees as of now. And 4 years ago, this was just about a little under 4 lakh crore rupees. So, while the number of AIFs has grown 2x, the commitment has actually grown 3x. So, which is showing that AIFs are increasing in their corpus that they're able to raise. Again, we have to keep in mind that this is only the AIFs. A lot of PE funds who are investing in India may have a investing vehicle in other jurisdictions also, for several reasons. Could be Singapore, could be something else. So that quantum is anyway not counted in this. So the overall number of AIFs, number of funds, and the capital that they're able to raise and deploy, that has been growing significantly over the last decade or so, maybe even longer, but for last decade for sure. And I think while this is happening, the advantage of this is that the depth of the markets is enabling funds to deploy more confidently. I'll give an example. Why does a fund, PE fund, deploy? Essentially, it cannot hold the stake in the portfolio company indefinitely. Over an 8 or 10 year window, it has to sell that stake, return the money with hopefully profits to the investors. Now, if they invest in a sector or in a company where the company is giving you good dividends, for example, but exit opportunities are hard to come by, then a PE fund won't invest in this, or they'll be very jittery. Because if you are not able to exit a company, what happens? Because of the depth in the market, funds are now confident that if they back a company, if the company is doing well, A, they can take the company to IPO, B, they could be strategic acquisitions, or C, some other PE funds who are perhaps looking to deploy higher amounts in the sector could take this company off their hands when it's already grown. So that depth in the market is giving a lot of confidence to PE funds and more so to VC funds to deploy and to back companies which really need growth capital or even startup capital.
Okay.
I think I think these are some of the key points which I can think of at top of my head. But also, what's happening is talking about the different breadth. Let's say 10 or 12 years ago, apart from Mumbai, Delhi NCR, and Bangalore, you wouldn't hear of too many PE funds. But now that's changing. That has already changed. And even in comparatively sort of non-traditional cities, I won't call them smaller cities, but non-traditional cities also, a lot of PE activity has been happening.
Yeah.
The other side of it, which I mean, we are talking about uh, business growing and business needing capital, and the overall growth in Indian economy has been leading to this expansion of PE funds as well. Other side is investors are deploying in PE funds, and investors are more willing to deploy in what we call as alternative asset classes. And these are not only global investors, but in extremely quickly increasing numbers, domestic investors also, be it HNIs, be it family offices. Uh, yeah, so I think it's an overall 360-degree growth in the ecosystem from investor side as well, from the portfolio side as well. And when both the sort of capital providers and capital requirers are out there, PE funds are obviously going to be there.
That is so well explained. I really could picture this in my mind, the way you explained. So there's a 2x and there's a 3x kind of a growth, and the private equity folks are getting they're getting good exits from their investments. So that's why the global markets are very excited about India. That's the core at whatever is happening. That's why we see so much of PE investments and a lot of IPOs are happening, which makes everyone excited in this domain. Okay, cool. So, so how do you see this evolve? Like, okay, so these are the numbers right now. Do you think this is again going to be another 2x, 3x in the next few years? Because, you have moved out from your role, right, as a CFO, as a finance controller, to starting your own. So definitely you would have seen an opportunity, right? So what is the
So,
opportunity you are seeing? And as a CFO, as an ex CFO, finance controller, what kind of services you're going to provide to uh, to this set of to this pool of receivers? Yeah,
so I think let's talk about the overall PE and VC ecosystem and its growth over the next decade or so.
yeah,
Uh, Indian businesses are booming. Economy is growing very well, despite the very unfortunate blip during the COVID times.
yeah,
So as businesses grow, capital is going to be required in ever increasing numbers, and the PVC ecosystem is here to support that growth journey. Not just capital, but also the other aspect which I mentioned in terms of strategic advice when required, etc. Then there are funds which are also looking for control transactions, wherein they would be involved in an extremely significant manner in the management of the portfolio company also. So, given this part on one side, the PE funds will continue to grow. The other thing which we have been seeing is a lot of individuals who have worked or earned their stripes in global PE or VC funds
yep,
are now coming back to India to start their own funds. Uh, and that is a very positive, I would say, bellwether development for the PVC ecosystem. As you have more sort of passionate individuals starting their own funds, they bring a little more something to the table, and the pie is ever increasing. It's not in terms of competition, but it's more in terms of collaboration, more in terms of how you increase the variety of capital available in the market. And given that, I see that over the next decade or so, this industry will continue to grow significantly. The other thing which is happening is uh, Indian capital has been getting channelized into alternative asset classes in ever increasing numbers. So that will definitely help fuel the growth further.
yeah.
We also have to talk about something like Gift City. I think that is or can be a significant game changer for both domestic capital as well as most of our for foreign capital. So I think regulations are becoming more investor friendly. We have been recently reading about FPI and FDI getting at par in some form. So I think overall, I would say all the signs are there for a continued growth of PVC ecosystem. And when that happens, the ancillary services which funds require, there's obviously market for that. I mean, the more vehicle manufacturing you are doing, auto ancillary will continue to boom. So maybe
Yes.
parallel to that.
Yeah. That's great. So when you say ancillary services, what are the kind of services that these funds would need, big, small, irrespective of their size? Yeah.
So I think what I can do is probably combine this with one other point which we have been talking about opportunities for finance professionals, because I think these two are essentially two sides of the same coin.
Yeah.
So uh, let's talk about the various services that a VC fund or a PE fund would require,
Yeah.
and which finance professionals will be in a good position to sort of provide if they uh, gain technical knowledge for that specific field as well. Excuse me, sorry.
It's cool.
Let's talk about the simple aspects first. Valuations. VC funds or PE funds investing in portfolio companies. Some are profitable, some are not profitable as it, but they are earning revenue. Some
Yes.
are not yet earning revenue, but they have products in place. Some are still pre-product. The ways you will evaluate or rather do the valuation for these companies is going to be different, and it would require finance professionals with a lot of expertise in valuation techniques and processes to help the PE funds or VC funds. So that's definitely one opportunity for my fellow finance professionals. Uh, be it practicing chartered accountants, be it people who are seeking to get a merchant banker license. Again, this is a massive opportunity. Again, valuations we can split into two parts. One is before a fund invests in a company. For regulatory reasons, you would need valuation certificates. And secondly, once you have invested, on an annual basis or semi-annual basis for your audits and investor reporting, you would need valuations. That's one aspect of it. The second aspect is of compliance, which is a significant opportunity for again for finance professionals, including let's say CAs and CS both, I would say. Uh, Now, compliance landscape in India is getting a lot investor friendly, as I mentioned earlier, but still sheer number of laws which are applicable for funds and for their portfolio companies would mean that any fund has to focus on compliance right from day one. If you are working with a regulator like SEBI, obviously SEBI's reporting requirements is something which you have to keep in mind. If you are receiving capital from foreign investors, then FEMA application aspects need to be kept in mind. Then you have your routine tax related stuff. Apart from the routine tax of income tax or GST, there are specific aspects, for example, angel tax, which was definitely something which all VCs would need to keep in mind. So all these challenges or all these aspects also provide a lot of opportunities for finance professionals to help with compliance aspects to PVC funds. A third opportunity could be of fund administrators. Now, PE funds or VC funds typically outsource their fund administration activity to a third party provider. Doing it in house is not really a very common, I would say. So traditionally, larger fund administrators who have sort of bespoke software deployed over years and developed over years have been doing this, and they continue to be significant players in the market. But what we have also seen the last decade or so is homegrown fund administrators starting from a smaller base, but who are equally agile and who are sort of here to support the funds they are working with. They are also providing their services, and that could be a opportunity for finance professionals also. And finally, coming to what we are hoping to do at Serendipity, essentially when you start a fund, the initial days of fund are always a combination of several aspects. One is you need to decide on the fund structure, the
Yeah.
domicile of the fund, jurisdiction, the entities, uh, and this is something which is going to impact the fund over its entire life of 8, 10, 12 years. Apart from that, you need to ensure that the fund documents which the fund council is drafting, uh, the essence of that is conveyed appropriately to investors. If they have any queries, those are responded to, and the investor onboarding happens smoothly. Parallelly, there's a regulatory process, whether SEBI, whether IFSC, or a regulator in a different jurisdiction. You need to coordinate with them for getting the fund registered. So this entire uh, gamut of services is something which typically a CFO would do for a fund. What happens for, especially for smaller funds, is that the founders of the fund, the general partners or GPs for short, they end up doing heavy lifting on all of most of this uh, because they may not need a CFO from full-time CFO from day one. And the flip side of that is the GP who would be spending her or his time on fundraising or for sort of finding deals to deploy is spending a lot of that time on activity which is something a CFO should be able to manage. The reason why they may not want a full-time CFO is that the work is not linear. Let's say you are applied to SEBI. SEBI will come back after 4 weeks, 6 weeks, or 8 weeks about the queries or about a resident certificate. In the meanwhile, what do you do? What does a CFO do? Also, till the time you have raised capital or you have visibility of your fundraising to a significant extent, attracting talent could also be a challenge for smaller funds initially. So that's the gap we are hoping to bridge by providing VC and PE funds initial outsourced fractional virtual CFO services in the 0 to 1 journey. And once they have closed the fund, once there's visibility on journey forward, and once they decide to hire a full-time CFO or a FC, we would be handing over everything to her or him, and then move on to another fund.
Okay, that's great. So Dave, when you talk about PE VC funds, let's say VC funds, we see a lot of smaller VC funds setting shop, right? So when you talk about them, how do you find these kind? How do you meet them, right? If what's the barrier to entry here? That's one. It looks like you have to know them to work with them because the stakes are anyways high. So that's
Yeah.
point. And the second one is, do you have to have sector specific knowledge to serve these kind of clients, or is it similar to any other organization where you're doing financial stuff and you understand the basic and then you can go ahead, because there's so many jargons used here. So these are
True.
my 2 points. Yeah.
Sure. So I'll address the second point first.
Yeah.
Obviously, a lot of
Barrier.
interdisciplinary jargon which is used in the jargon is used in PVC world. But honestly, if you sort of uh, take away the layer of jargon, the core financial concepts remain very similar to what any other industry would have. Especially service industries, I would say. Manufacturing is a different ballgame, so let's not get into that. I think one key differentiator for any fund structure is that unlike, let's say, a closely held company,
Mm-hmm.
you are responsible to, yes, the principals or the GPs of the fund, but also to the investors. You have a fiduciary responsibility towards them as well. And the investors in funds are typically large, so let's say HNIs or family offices or even endowments, fund of funds. So we're extremely savvy investors who would want a reporting done in a particular manner at a particular frequency. They might have questions from time to time, and you need to be able to address those. Now, that's something which you essentially learn when you start doing it. I mean, unless you are actually in the river or in the pool, you can't start swimming. But coming to the barrier to entry aspect, how do you actually get into the ecosystem? Otherwise, it becomes a chicken or egg story. Since I don't have experience in VC, I can't work for a VC, and since I don't work for a VC, I won't have experience. I guess there are two or three ways to approach this. One is if you know someone who has the VC fund or PE fund, and if you strike a conversation and explore an opportunity to working with them, that's a possibility. Failing that, the other way is by way of a lateral movement into funds by initially starting your career uh, with entities or with service partners who help funds. For example, if you are a CSLP and if you have been working with a law firm which has funds at its clients, then while working with the funds, you understand the nitty-gritties and nuances of the fund structuring, fund documents, etc. very well, and that can help you move into the fund space directly as. Alternatively, you might be a CA or an MBA working with a big four. You're working on M&A. You might be working on general tax advice to your fund clients, and then you could move into a fund. You might be an investment banker. Let's say you're a CFA. You're working with an investment bank, and then with your experience in either buy side or sell side, if you decide to move into PE fund, that might be opportunity. So I think that's probably is the only answer I can provide. There are no magic wands out here. But yeah, I think once you get into the world of PVC, that's something which is thoroughly enjoyable, and every day it's comes with the new learnings.
Okay. Is talent scarce in this segment, especially the finance talent in the private equity, even in the VC? Like, if a VC wants to hire a CFO or a finance controller, do you think talent is easily available, or no, not really?
I think it's a evolving landscape. Uh, for the number of VC funds which are existing as of date, I mean, all of them would have some finance professionals working with them, either a CFO or a FC or a VP finance, etc. So it's not as if there's a massive dearth of talent. But having said that, as I mentioned earlier, number of funds is growing, and that obviously creates more and more opportunities for finance professionals to sort of get into the ecosystem and work with funds. Uh, as of date, if you want to hire let's say a finance manager in a VC fund, typically you would need to look outside the VC ecosystem because sort of movements within the VC ecosystem are going to be comparatively limited, but you'll get amazing talent from, let's say, like so big fours, etc., who have worked with VC funds or PE funds as a clients. So that way, uh, I think the boundaries are fairly porous. If you look at purely PVC, then yes, the talent pool is limited in some way, but the porous boundaries enable, let's say, experts from Big Four, etc., to enter this world as well.
Okay, that's well explained. And when you talk about VC fund in India, it's growing at a rapid rate. So do you have any number of what it was and what it's going to be and what is it current?
So, as I mentioned, the overall number of AIFs, which includes PEVC and all three categories of AIFs, that has grown 2x in the last 4 years, and I think that will keep growing. I think instead of cold numbers, what could also be an interesting indicator is on LinkedIn. If you just follow news of, let's say, hashtag P, hashtag VC, etc., there are some very interesting new fund which are being set up, without specifically naming names, but there's a pre-seed fund which is launched very recently and which promises to do a lot of good for early stage founders who may not know how to approach a VC fund. There are funds which are being set up in let's say Ahmedabad, gift city. So
Yes.
I think a lot of development is happening on an ongoing basis, and this number will continue to grow.
Okay. And how's it been with Serendipity Fund Advisors, which you've just started? Like,
True.
have you already started and clients on board? Would you want to share a little?
Sure. So we started less than a month ago, and my expectation was that the first couple of months were probably going to be used purely for creating awareness, evangelizing the market, etc. But I'm very surprised and pleasantly surprised that that's not the case. I mean, already started work for one client in advanced talks of discussion with another. So I think the traction has been very good. I think what's crucial here is to make sure that it's a win-win, and you don't go with a sort of specific expectation that this is something I did at so and so fund, so this is something I'll do here.
Yeah.
You can't approach all situations with this sort of predetermined solution. You have to listen to what the pain points are, what the problem statement is, and then think about it and address that. If you are willing to do it, then yes, I think the market is definitely out there.
That's great. That's amazing. And how did you discover these clients? I mean, they would have approached you because you've been in this industry for a very long time.
To be very honest with you, Chantal, I think uh, for several of the years in PVC ecosystem, I was working more in a slightly insular manner, I would say. So I would definitely have ecosystem connects, but not to an extent which was possible. But the last few years, I've tried to correct that, and yeah, there are ecosystem connects which one can reach out to and just speak to them. Again, one has to keep in mind that not each conversation is going to result into something concrete immediately. Sometimes it may not result into anything at all in terms of business development. But you understand the pulse of the market, you understand what's happening, and sometimes the word of mouth publicity is something which works the best. But apart from that, one has to do cold reach out, one has to sort of get involved in conferences, seminars, and again the idea is to understand more and listen more than to speak, and I think that probably will give you maybe not a huge number of clients, but clients uh, whom you will be happy working with and who will be happy working with you.
Okay, cool. So now you talk about PVC. The hotspots are Mumbai, Bangalore, Delhi,
Yeah, true. And I think beyond that,
Noida.
it's also growing. Hyderabad. I mean, when I say Delhi, I think Gurgaon and Noida, will in
It's the
some
same.
ways combined as a
Yeah,
same. Very, very different cities, very different
yeah,
ecosystem, but geographically very, very similar, I would say. But
yeah.
there's some activity happening in Hyderabad, some in Chennai, Ahmedabad, gift city definitely. Also, I think you would see some activity increasing in let's say places like Jaipur, perhaps. So yeah, this Pune even. So a lot of activity uh, would be taking place, and as the market keeps on expanding, we'll also see. So let's say if in a state which is traditionally been considered the hinterland, but
Yeah.
when you see entrepreneurs starting their businesses in that state or that region, and once that happens, then obviously there would be funds who would want to support those, and then maybe sort of start their base over there in states or regions which earlier were not really hotspot of PVC activity. So this will continue to grow in both breadth and depth.
Cool. I've got two questions for you. Okay, so this one is pretty generic. Like, what was your learning as a controller at Kedara? What were the key activities? You did touch upon the key activities, but if you want to a little bit, and
Sure.
as you mentioned, it was learning on the job. But in this 10 years, what did you observe in terms of a PE firm? How do they structure themselves? What's their team size? What kind of people? We always hear chartered accountants saying, hey, we don't get a analyst role. We're always offered like a finance sort of
Hmm.
a role. What is the mindset that they're looking for? I'm sure they're looking for something which
Sure.
we can develop.
I think that's an excellent question. I'll try to answer it. May not be able to answer it fully, perhaps, but I'll give my best. Uh, what did I learn as a finance controller at Kedara? A lot of things. There's still a lot more to learn, but essentially, how a fund is structured, how it operates, how does the investment process take place, and there are certain things which will come across as very simplistic, perhaps, but which are crucial. Uh, Important of documentation. I mean, I cannot stress it enough. For any finance professional working with a PE fund or VC fund, important document is massively underrated. I would say it's and something which you learn the hard way at times. Uh, so let's say if you have a particular process of investing, you have certain committees, a recommendation committee or investment committee, and once they recommend a particular investment, then it goes to the board, etc. Now, obviously, funds follow the processes, but it's possible that, let's say, for one of the committees, the minutes were not distributed immediately. So how do you ensure that something like that doesn't happen? So having processes in place is important. Having checklists is important, and something which I learned is human mind can sort of think of maybe four or five or six things parallelly at the same time. But in your day-to-day work, there will be several things which will be coming your way of various degrees of magnitude on the important, urgent metrics.
Yeah, yeah,
So crucial to make a note immediately, even if it's something very minor. Some vendor calling you asking for their Form 69, fine, not urgent, not massively important. I can do it in 3 days' time. That's okay. But if I don't make a note of it, I'll probably forget, quite likely, because then immediately after that, I'm working to update the reporting deck for a particular investor. But each stakeholder is helping in your journey. You have to make sure that you do right by them. So I think keeping a track of all your deliverables and being very uh, as methodical as possible is crucial. Again, this I know this sounds very generic, not really PVC specific, but I think that's fun learning. The other aspect is that I would say things change, and sometimes things don't go exactly as you planned. So let's say you might have made. So this is not something which happened with Kedara, just to clarify, but a hypothetical example. Uh, you have applied for your AIF registration with SEBI, and the trustee whom you are working with suddenly has received some sort of a minor notice from SEBI about some minor infraction. Not really important. It can be sorted in a month or two. But till the time that is sorted, your SEBI registration is impacted. So what do
yeah,
you do? Then you might have to change your trustee. So you'll have to think on your feet. You have to action it, and while doing it, you have to be fair to everyone. The earlier trustee also, uh, maybe it wasn't their fault, so you shouldn't sort of blame them unnecessarily. And finally, blaming is not going to help you reach where you need to be. Just keeping your sort of the bigger picture in your mind, and whenever there are hurdles, and there are going to be hurdles in pretty much everything, just try to be as calm and composed as possible. Fundraising can be massively how do I say, intense activity. Not just in terms of the number of hours one will spend on that, but also in terms of the emotional aspect of it. Uh, you get someone committing a large value check, you feel euphoric. Someone else whom you have worked with for last 4 months, trying to convince them. At last moment something happens and they say, okay, we can't invest. You feel completely dejected. Someone who was willing to invest and you are willing to take their money, but there's some regulatory change, and because of which it may not be possible to accept their money. What can you do? But this entire journey, one has to try to be as calm and composed as possible. And I think crucial to remember that any fund is a longer term journey. Typically, the fund life is 8 to 10 to 12 years. Even while deploying capital, you hear buzzwords. Okay, blockchain. Yes, obviously there are significant opportunity in the blockchain based, I would say, enterprises. But is that enterprise really based on blockchain, or did someone have an idea and just to make it more palatable to investors, did they just add a blockchain layer on top of it without it being actually sort of a USP of any sort? So I think uh, separating facts from I wouldn't call it fiction, but from the buds is something one should be very careful about.
Cool. How is it working with, ambitious, driven folks, be it at Lumikai or be it at Kedaara, who've really built substantial, huge, especially Kedaara, right? It's something so massive. So, what have you learned? What has been your observation for 10 years working in close quarters?
Oh, it's been fantastic. So both at Kedaara and also at Lumikai, I think the fund founders are how do I say, individuals with immense intellect, immense drive, immense passion, and a matching level of commitment and dedication. So there's a lot that you can learn from them. Not always by sort of getting into specific discussions, obviously that too, but also sometimes but just by observing how they would sort of communicate with a prospective investor. How would they communicate with even your let's say a tax advisor? The clarity of thought, the clarity of communication, and how do they actually make this whole process as efficient as possible. I think that's something which is a joy to behold actually, and one can try to imbibe some of that definitely is helpful. uh, Sometimes, and this is for the benefit of our friends here who
Yeah.
may or may not have worked with PVC folks earlier, some PE or VC funds might come across as a little, what's a brusque at times, but it's not personal. It's just that, let's say if they're looking at uh, let's say 10 funding proposals on every given week, then you have a limited amount of time to convince them of your sort of pitch deck, let's say. And if you are not able to do it, the amount of time they can invest for your deck is going to be limited. Or let's say if you're working with a VC fund or a PE fund, uh, you have a particular aspect about, let's say, your financial statements. Uh, Now, obviously, that's one of the key aspects of financial reporting to investors. But along with that, the GPs, the founders of the fund, the general partners, they are at the same time working on fundraising, they are working on deployment, they are monitoring the existing portfolio companies, they are working on the uh, team building for the fund itself and perhaps of the portfolio companies. So the amount of bandwidth they would provide for, let's say, what might be a comparatively smaller aspect of, let's say, notes in the financial statements, the bandwidth will be limited. So, I think learning about when to flag something and when to take decisions without sort of doing a CYA, pardon my French. I think that's a art which you learn over a period of time. But yeah, overall, it's been fantastic working with both the funds, Kedara and Lumika both, and a lot to learn from the founders, the energy that they bring to the table, the passion, and the intellect. And I would say one has to be intellectually honest in any situation. If you know something, great. If you don't know something, or if you haven't understood something, better to just be upfront about it rather than sort of trying to make something work and then compounding the issues. Best to sort of sort things out, do things first first time right, and yeah, even if it takes a little longer, it's still worth it.
And it's like every day is a high pressure game for the founders, or it's like only when you're raising and deploying, or it's a continuous journey. It's never.
I won't say every day is a high pressure day, really. Uh, Ideally, it shouldn't be. When you are fundraising, yes, there will be a lot of high pressure days. When you are deploying, again, when you're uh, doing diligence on a company, again, there will be a lot of activity happening, internal discussions with let's say lawyers, deal advisors, etc. But then there are times when you're just monitoring your portfolio companies. They are doing well, everything going smoothly. You already raised your fund. The next fundraise is 2 years away. But does it mean that you can basically chill and sort of end the day at 2 p.m. and go to play golf or tennis or whatever? Like, no. You have to be ready for your next fund. If you have, let's say, 20 investors or 30 investors in your current fund, you have to keep in touch with them so that they're aware of your thought process about what your future plans are. So that 2 years later, when you want to raise your next fund, you can approach them and they're aware, they're in tune with your plans, and they're there to support you. Similarly, your portfolio companies, everything going smoothly, great. But is there something you can do to help them grow further? If so, what can you do? Equally importantly, okay, you have 10 really good portfolio companies as of now, but for your next fund, you would want to build a relationship which will give you the deal flow pipeline for your future deployment. Uh, your ecosystem connects. There might be an opportunity a year down the line, which is of a quantum which is larger than what you would be in a position to invest from your fund. But then, can you invest, co-invest along with another fund? They invest 40%, you invest 60%. For that, you need to maintain the connections with the ecosystem. So this entire aspect is, I would say, uh, skill is obviously hugely important, but networking is also equally important to make sure your fund continues growing. And it's not never for just one fund. All the successful funds have their fund one, fund two, fund three, fund four, and so on and so forth. And that's how you build a brand, you build a legacy, and not just a single fund, uh, which won't really impact the ecosystem in a significant manner.
That's amazing. That's some great pointers. It's always a long-term networking, connect, relationship building sort of a thing, which is a key factor from what you say, and of course, delivering on to whatever you've
Absolutely.
committed. Yeah, cool.
Absolutely.
So, Dave, thanks a ton for this. Do you have any closing message? Something that you would want to say to? So, there are so many heads of finance, CFOs. Actually moving into the space of CFO services, virtual services. It's like the most happening considering the IPOs and PVC is happening. What's your closing statement to them? What would you want to say?
Sure. So I
Or
think two aspects. Sure. Two aspects perhaps. One is if you are continuing to lead the finance function in your organizations, and if your organizations are looking to raise funding at some point of time in future, even if it's not a certainty, but it's a possibility, try and develop contracts with the PVC world. uh, not don't wait for the time when you are actually raising capital. Just sort of be in touch with people, uh, just have conversation over coffee, or understand their thought process so that you are ready when you actually decide to raise capital. That's one. Secondly, if you are looking to get into the PVC world either directly or indirectly as a service partner, it's an amazing industry to work in or work with. I think again networking is crucial, and if you haven't really been exposed to the terminology or jargon of PVC, that's something one can start reading about. One can start, and there are some really good materials available, both in terms of books, both also in terms of online courses, etc. So explore those, and yeah, if I can help in any way in terms of just brainstorming on potential thing, happy to speak anytime. And all the very best.
yeah.
And thank you so much, Chantal, for the opportunity to share experiences. And it's been amazing speaking to you.
Thank you so much. It's a great learning for me as well. I just did a little bit of research and I really wanted to understand this because whoever I speak to are really talking about this industry, even in the US, even in India, even in Dubai. family offices, PEVC, that's where the money is, and that's where they need services. So that's a great perspective that I've gotten from you. And thanks a lot for taking the time and being here. And everyone who's watching, thank you so much. I somehow cannot see I cannot see a lot of people here. There is some issue with my StreamYard and LinkedIn. It happens sometimes. So if you guys have any questions, you can directly hit up Dev, or you could text me and I could connect you to Dev, whatever works. So thanks a lot. Thank you so much.
Thank you so
Thank you,
much.
guys. Thank you so much. Thanks, Dev. See you. Bye. Thank you.